I'm Deborah Borchardt, and this is your midday market update. Well, we are up once again. The bull market continues. I'm here with Keith Bliss from Cuttone. So Keith, you know, so many people have been waiting for the pullback and the correction that has not happened. And if we get a pullback, it's only a few points and then it's bought right back up. So really, you know, for a lot of people, they're wondering, can it still get in? Am I chasing it at this point? And if I do get in, where do I go? Because it seems like everything's already moved.
Yeah, always the $64,000 question that we're getting every day. So if you want to get in on a broad market basis, I'd actually wait a little while. We're bumping up against the key resistance point for this bullish sentiment and this bullish behavior inside of the market to continue on. At 1647 on the S&P, by the way, is that level. The next one then is all the way up to 1670. So a couple of real heavy resistance lines that we got to break through to sustain this rally. Now, on the other hand, the reason I say wait from a broad market basis is that if we stay above 1597, which is the old high that we achieved back in 2007 for about a month or so, that is a very favorable sign for this market to stay up here and to continue to go. So if you want to wait a month, if you're willing to wait a month, you can buy a nice basket of broad-based stocks across all the sectors and ride them up. It's not too late to get in. If you want to get in now, though, you really have to be careful and pick and choose your spots, and I think that's really what you're asking about right now.
Yeah, because a lot of people were in defensive names at the beginning of this rally. Well, those have kind of started to sell off because everybody went, okay, well, I don't think I need to be there now. So those started to sell off.
Yeah, that's right. So you're absolutely right. This rally, this strong rally here got started and took us to new highs based on the backs of the defensive names. Consumer staples, utilities, healthcare, those types of names. We really didn't see it in the financials, the consumer discretionary names, the growth names, the technology names that we would look at. The rotation has occurred. Those sectors, the growth sectors, are now leading this rally higher. And utilities, by the way, and the quantitative work that we look at is the most oversold sector that we're now looking at. Pretty remarkable. 3 weeks ago, it was the most overbought sector. Now it's the most oversold sector. So if I were going to get in right now, I'd be looking at things like healthcare still. Those are still great names, and healthcare, I think, will be a great sector to go for many years as the population ages. That's no secret what's happening here in the United States. A short-term tick up, you could get into utilities and ride that up. That is a very good technical and quantitative trading sector. It'll get oversold, it'll rally back up to overbought, it'll come back to oversold, so you can get in and out of those names. And then, of course, look at the consumer staples. Those are old line, old economy companies. People will still be eating cereal, people will still be buying diapers, people will still be putting clothes on their back. Those sorts of companies are always good plays. And right here, right now in this market, even though we're at lofty levels, you could get in those sectors and ride them up for a few points of gain.
So we're looking for value in all the right places?
Better than looking for love in all the wrong places.
And that's your news from the floor in the Midday Bell. That's Keith Bliss from Cuttone, and I'm Deborah Borchardt with The Street.